Thank you very much. I'd like to say thank you for the invitation today. I'm very proud to be here. I'm not so proud to say Japan has performed badly this year. I think you all came into this year with very high expectations after last year's performance in Japan. And now we're wondering why you were so bullish on Japan last year. I've been somewhat of a contrarian my whole career. And so actually I was quite negative last year at this time. And in our long-short funds, we were actually net short Japan, which is strange because Japan is all that I do. I've never worked outside of Japan. But I have seen Japan come and go out of favor over the last 15 years or more. And I think now is the time to take another look. I don't think Japan has betrayed us. I think a lot of things have happened in the markets to make risk appetite very low, but the fundamentals continue to improve. So today I'd like to focus a bit on the big picture. Although I'm a stock picker by nature, maybe we look at the underlying picture in Japan and see why the market has a very good chance next year. The yen, of course, has been weak, and it's now at the weakest level since 1985. And it's interesting because this reflects a similar environment to what happened in '85, where domestic assets, real estate prices started to rise, the yen started to rise, job growth took off, and domestic economy took off in Japan. A lot of investors in 1986, 85, 86 were forced to look away from blue chips, which had been the previous favorites in Japan, and look toward domestic demand. And prior to '85, I don't think any of you could name a Japanese retailer or a Japanese housing stock. And I think the situation is back to that again, in that everyone's focused on the blue chips, the exporters, and things benefiting from, companies benefiting from China demand or US demand. And I think a lot of factors in Japan are lining up to have a repeat of what happened in '85, '86. And let's go through some of them. We're seeing that finally the money supply is tightening. One reason the yen was so weak for 20 years, the weakest level in 20 years, because of the liquidity that the BOJ allowed. That's tightened on the back of improving fundamentals. We're worrying about bank lending to property, and of course how property market has been booming in Japan for 4 or 5 years. People are worried about how that might turn into another asset bubble. And then finally, people are very worried about consumption and wage growth, and the fact that although companies are making a lot of money in Japan, individuals aren't. So going through a few of the macro factors, you can see here that the yen trade weighted is back to where it was in '85. This is JP Morgan data saying that it's even back to where it was in 1970. And so yes, the yen has very little buying power. You might not see as many Japanese tourists in Paris. But what it does have is very high competitive power. It can compete very well against the Chinese or the Koreans. Matter of fact, even in hotel rooms, Tokyo is now about half the cost of Shanghai or Seoul. And finally, why would this yen weakness turn the corner? One reason the yen has been weak is because liquidity was being pumped into the system. That liquidity has been drained off, and the yen has recently found a bottom. Just in the last few days, you've noticed that the yen is now finally appreciating against the dollar. The other reason the yen could find a floor is that the real estate market has taken off. You can see since January of 2000, the real estate sector relative to TOPIX is one of the top performers. Last year was the second best performer in Japan after non-ferrous metals. And assets attract a lot of hot money. If real estate markets elsewhere go a bit quiet, if you have a feeling that US property market might have had its day, or UK property has gone up far too far, Japan is a place to revisit. One reason is the yield over risk-free. So in the US and the UK, you realize a rental yield on property about 100 basis points less than the government bond yield. So it's pure speculation that somebody else will be willing to pay a higher price for these same assets, or that you'll be able to raise rents significantly enough to cover the risk of buying this property. A lot of that is reflecting M&A in the sector. For example, REITs in Japan, you can see the REIT relative has underperformed, and that's basically because REITs are seen as boring. Whereas in the US, REITs are seen as sexy and exciting. On the back of REIT M&A, there's been $98 billion worth of REIT M&A in the US this year, and zero in Japan. The entire REIT market in Japan is only about $45 billion. So you could see what might happen if there was a bit of REIT M&A coming next year, and how these REITs could play catch-up to the real estate index, and how suddenly some of the money that's been playing the REIT M&A theme or the real estate theme in the US could come into Japan. This reflation is finally reaching the suburbs. Reflation starts in the center of Tokyo with the most valuable property, whether it's Ginza or Omotesando, the office buildings in Marunouchi. It's taken 4 years to finally reach the suburbs and affect individual wealth. Negative wealth, the wealth effect is very important because negative equity has held the consumer back in Japan. And finally, people's homes are worth more than what they owe on them. And so it's a very different picture than what was happening in the US and Europe, where people's homes created a lot of wealth. People spent some of that wealth and created a big boom in consumption. In Japan, people are finally able to sell their home for more than what they owe the bank. And this affects the consumer psychology very much. On top of bank loans finally rising, unemployment finally falling, the number of unemployed has fallen by about 800,000 people in the last 2-3 years. And this is very real because it's been a shift in the quality of employment as well, away from part-time employment to full-time employment. Full-time employees will take a mortgage. Full-time employees will get married. The reason why Japanese companies are finally forced to shift to full-time employment is because they're afraid they won't find these people in a few years. The workforce in Japan has peaked. And if they don't hire these people full-time and lock them in, they won't find them when the time comes. So a combination of the negative equity and changing to positive equity, and unemployment is coming off, and full-time employment growing, and bank loans rising means that finally the consumer in Japan feels confident enough to start spending. The final piece of the puzzle, of course, is income. And Japanese corporate profits have gone up 80% in the last 4 years, and take-home income in Japan has gone up 1%. So I can repeat that. I mean, corporate profits have gone up 80% in the last 4 years, and take-home incomes have gone up 1%. So labor's share of wealth in Japan is the lowest ever in the history of Japan. So there's a lot of room for improvement. If you think that finally the worker has some bargaining power on the back of tightening labor market, on the shrinking of the labor force, on the improvement in their bargaining position, bonuses, for example, for this year, December bonuses are record highs. It's the highest ever in Japan. And so that's a sign that finally the balance is shifting towards labor. And I think corporate profits might start to go sideways at very high levels. Meanwhile, the reason they'll be going sideways, a lot of the costs will be going up. So labor costs will finally rise. Rents are rising on the back of rising property markets. Taxes are rising on the back of the situation the Japanese government is in. Other input costs, commodity costs have been rising. And so I'm not that bullish on corporate profits as a whole. They're already at record levels. But I am very bullish on individuals and labor sharing a greater piece of those profits and that feeding into the domestic economy. And it's just in time. Because if the economy was too dependent on China and the US for too long, of course, there could be a very steep price to pay when the US and China goes quiet. I think it's a chance for Japan's domestic economy to take over and become the engine of growth. Labor income index is finally recovering after having been down since '99. But all of this hasn't shown up in the topics yet. As you know very well, the only top performing stocks in Japan have been the biggest 30 names, the blue chips, and people hiding in the most defensive names, looking for places to hide in Japan in blue chip, defensive, export stocks. And I've heard statistics such as Merrill Lynch receiving 80% of their orders in Japan in 20 names, and it's all the big blue chips. So what I'm suggesting is that next year will not be a repeat of this year. And these big blue chips, of course, have benefited from global demand, but they don't reflect the changing situation in domestic demand in Japan. We've had underperformance of growth for 6 years, since '99. So some of you might have thought we had a small cap rally in Japan, but actually we've had a decline since '99 in risk appetite in Japan, and a decline in performance relative to value. Value stocks in Japan are at a 20-year high. So if you thought Murakami and Steel Partners and some of these other value investors have had an impact in Japan, they have, on share prices. So there might not have been many transactions in Japan in these value stocks, but the prices are at a 20-year relative high, and growth is at a 20-year relative low. And so I think it's a good chance to take a fresh look at growth. At the moment, you don't have to pay a premium for growth in Japan. Strangely, value trades at a premium to the main market. Growth trades at a discount. And that's only happened twice in the last 15 years. It happened once in late 98. It happened again in spring of 03. And so if you think of what the markets looked like in late October in October of 98 and what the market looked like in Japan in spring of 03, it was very risk adverse. It was a very similar situation to today. But if you had taken the courage to invest in those times, you would have done very nicely. And so I would suggest take a fresh look at Japan, consider what might be on offer in terms of growth at a discount, and I think it's a very good chance to get involved again, and Japan might turn into a leader after all. Thank you very much.